1. A key function of corporate treasury and strategic planning is to a. Approve company-wide marketing budgets. B. Monitor compliance with local tax regulations. C. Optimize the firm's capital structure. D. Conduct external audits. 2. The primary benefit of a centralized treasury structure is a. Increased local autonomy. B. Greater FX exposure. C. Improved control and visibility over cash flows. D. Decreased operating efficiency. 3. In a notional pooling arrangement, a. Funds are physically transferred between accounts. B. Cross-border cash concentration is prohibited. C. Interest is calculated on the net notional balance. D. Each account incurs overdraft charges. 4. A zero balance account ZBA is primarily used to a. Reduce currency exchange risk. B. Minimize idle balances in subsidiary accounts. C. Increase overnight investment returns. D. Facilitate international wire transfers. 5. A key objective of cash forecasting is to a. Ensure optimal payroll processing. B. Predict future cash surpluses and shortages. C. Audit supplier payment schedules. D. Adjust shareholder dividend payouts. 6. Which financial ratio is most commonly used to evaluate a firm's liquidity? A. Debt-to-equity ratio. B. Current ratio. C. Gross margin. D. Return on assets. 7. A company wants to reduce its days sales outstanding DSO. The most effective action would be to a. Offer extended payment terms. B. Switch from lockbox services to mailroom processing. C. Offer discounts for early payment. D. Delay invoice issuance. 8. Factoring refers to a. Pledging future receivables as collateral. B. Selling accounts receivable to a third party. C. A form of leasing for fixed assets. D. Hedging against commodity risk. 9. A just-in-time JIT inventory strategy typically results in a. Increased working capital requirements. B. Higher carrying costs. C. Reduced inventory holding costs. D. Extended cash conversion cycles. 10. Treasury should consider which of the following in short-term investment decisions. A. Tax loss carryforwards. B. Yield, liquidity, and safety. C. Depreciation rates. D. Cost of debt. 11. Value at risk VaR is primarily used to measure a. Operational risk. B. Counterparty creditworthiness. C. Market risk. D. Currency translation effects. 12. A natural hedge typically refers to a. Purchasing insurance for asset losses. B. Using financial derivatives for risk mitigation. C. Aligning cash inflows and outflows in the same currency. D. Increasing inventory to offset price spikes. 13. Counterparty risk in a derivative transaction can be mitigated by a. Lengthening contract maturity. B. Settling transactions on a gross basis. C. Using a central clearing counterparty CCP. D. Engaging in forward contracts only. 14. A firm facing interest rate risk due to floating rate debt may hedge using a. Forward rate agreements. B. Commodity swaps. C. Cross-currency swaps. D. Credit default swaps. 15. Scenario analysis is best used to A. Determine creditworthiness of clients. B. Simulate multiple economic conditions for planning. C. Comply with Sarbanes-Oxley Act. D. Conduct internal audits. 16. A revolving credit facility is best characterized as A. A short-term equity investment. B. A permanent source of long-term funding. C. A line of credit with the ability to reborrow. D. A type of mortgage-backed security. 17. Commercial paper is typically A. A secured debt instrument. B. Issued by the government. C. Used for long-term financing. D. An unsecured, short-term promissory note. 18. Covenant-light loans, A. Are more protective for the lender. B. Include detailed maintenance covenants. C. Have fewer borrower restrictions. D. Are prohibited in international markets. 19. The cost of capital is A. Always equal to the cost of debt. B. Determined solely by equity holders. C. A weighted average of debt and equity costs. D. Fixed and independent of market conditions. 20. Which instrument offers the most liquidity? A. Treasury bills. B. Corporate bonds. C. Certificates of deposit CDs. D. Commercial real estate. 21. ISO 20022 is a standard for A. Derivative pricing models. B. Financial messaging interoperability. C. Tax accounting frameworks. D. Credit ratings of sovereign entities. 22. Which of the following is true about SWIFT? A. It facilitates securities clearing. B. It acts as a central bank for member nations. C. It provides secure financial messaging. D. It offers real-time settlement services. 23. Real-time gross settlement RTGS systems, A. Allow for batch-based netting of transactions. B. Are used exclusively for securities trading. C. Settle transactions individually in real time. D. Operate only within the U.S. banking system. 24. Blockchain technology offers A. Anonymity through centralized databases. B. Decentralized and tamper-evident record-keeping. C. Real-time auditing by governments. D. Risk-free interest rate calculations. 25. The term straight-through processing (STP) refers to A. Manual reconciliation of cash positions. B. End-to-end automation of transaction processing. C. Zero balance account sweeps. D. Outsourcing treasury operations. Association for Financial Professionals. The Association for Financial Professionals AFP test, most commonly known as the Certified Treasury Professional CTP exam, is a globally recognized certification designed for professionals in corporate treasury and finance. It assesses a candidate's knowledge and skills in key areas such as liquidity management, cash forecasting, risk management, capital markets, payments, and corporate financial strategy. The exam is intended for individuals who manage treasury operations, oversee corporate cash and liquidity, or develop financial policies. Earning the CTP credential demonstrates a high level of professional competence, enhances credibility, and opens doors to advanced career opportunities in financial leadership. The certification is updated regularly to reflect evolving industry practices and regulatory standards. Here are the top 5 beneficial uses of the sample exam. 1. Professional credibility. Earning the Certified Treasury Professional CTP credential through the AFP test validates a high level of expertise in corporate finance and treasury, enhancing trust and reputation among employers and clients. 2. Career advancement. The certification opens doors to leadership roles and greater responsibilities, increasing opportunities for promotions, salary growth, and professional recognition within the finance industry. 3. Global recognition. The AFP test is respected worldwide, making it ideal for professionals seeking international roles or working in multinational corporations. 4. Enhanced skills and knowledge. Preparation for the test ensures mastery of core topics like risk management, cash forecasting, and capital markets, making candidates more effective in their roles. 5. Networking opportunities. AFP membership connects professionals with a global network of peers, mentors, and industry leaders, facilitating career support and collaboration.